Welcome back, and joining me for a closer look at what's playing itself out in the market scene is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. A sea of red there across the board, and it's the 3rd of October, so still quite fresh into the month. Would you say that it's been a rough October so far, or this is just a cooling down from a very massive high?
Well, frankly, a little bit of both. Difficult to say, there's some profit taking, and of course, we had a fantastic Q3 in general, and some uncertainty was washed out of the market. To be very specific, we saw sort of the bedding down of the government of national unity locally. We saw the outlook for interest rates becoming firmer, a jumbo cut from the Fed. Inflation coming through benign, and late in the month, we saw unprecedented Chinese stimulus. So those were three major components that really fueled the market, that added to a lot of optimism. And I must point out that in the wake of the last of the three, the Chinese stimulus, Jamie Dimon, who seems to be a clever guy, head of JP Morgan, specifically said that, the immediate threats have turned out benign. The outlook is positive. Now we can focus on the geopolitical risks. And here we see geopolitical risk escalation weighing on markets precisely, so those sort of outsized, less probable events. And we're seeing that in the form of a potential war in the Middle East.
Yeah, actually, quite interesting, because just when you think that you are done with the headwinds, new headwinds come out, or older headwinds that people had maybe forgotten about start to re-emerge. And just talking about, where we could get a tailwind or a headwind is the US labor market, and investors are awaiting that data, particularly the September non-farm payrolls tomorrow afternoon. What expectations have markets baked in there? And do you think that we could see maybe a significant move in sentiment after those numbers come out?
Yes. Look, if they come out too rosy, that dials back the expectation for another jumbo cut, and perhaps we'll only get a 25 basis point cut. I think the market is starting to make its peace that will only see 25 basis points cut from this point forward. Having said that, the initial jobless claim, so that's essentially the number of people that claim for jobless benefits immediately after losing their jobs, those numbers were published today, and they actually came in slightly ahead of consensus and worse than in the previous period. So maybe the job market in the US remains robust and reasonably close to full employment. So maybe we'll see sort of benign to flat non-farm payrolls more likely, but the market will react strongly if anything deviates from that expectation.
All right. Well, let's get into expectations from Baldwin, because they released a year-end trading statement today saying that they expect the bottom line to slump as much as 59%, seeming that it's been quite a rough period. Just talk to me about that, and maybe markets can maybe start looking, I guess, a little bit more forward and not necessarily on the past period, and maybe start looking forward to the prospects here.
Yes. Frankly, Baldwin are laying a lot of the blame on, the consumer being under pressure, and more specifically, interest rates being high for a prolonged period of time. And we've certainly seen that really put pressure and squeeze the life out of the local consumer economy. So I think markets will certainly dissect those results and really look for, call it, more project-specific risks. The nature of development is you might make a bad capital allocation, you might make a bad investment. So we do need more detail and precisely, where the underperformance has come from. But more generally speaking, without having that information immediately available, the expectation certainly is for that situation to turn around, given that the outlook for inflation is very benign, barring further blowouts in the oil price, of course. Therefore, we'll see more accommodative interest rates over the next 12 months. And on top of that, we've seen the general sentiment towards the South African economy and the potential for economic expansion improving as well. All of these things on a forward-looking basis could be very positive for property developers.
All right. Well, the next reporting period is going to be quite interesting. Cobus, let's get to your stock pick for today. What are you choosing?
So I had a look at the stocks I like, and of course we're still on an SA Inc.
Shopping spree.
Yes, precisely. And if you are of the opinion that this is just a blip and it's early in the month, and we're seeing a bit of profit taking on top of the potential pressure coming from the Middle East. But, frankly, they can shoot missiles at each other, but these are not adjacent countries. So hopefully that prevents the situation from escalating. So if you're looking for something that's gone cheaper today than it was yesterday, a stock that we like at the moment is Aspen Pharmacare. So they came with results recently, and Aspen is sort of a bit of a history of mismanaging expectations, overpromising and underdelivering, and then that share price running ahead and then correcting upon results release. We've gone through that cycle once more. So in the short term, we expect them to do better from their sterile fill business. And that really, I think, is a baseline expectation, which should lead to significant earnings expansion. That, of course, is vaccine production more specifically. And they're looking to become, call it the capital or the hub of vaccine production for the entire continent. And then the free optionality in there, something that people have been speaking about, of course, Ozempic, the weight loss diabetes drug being all the rage. And that isn't in the price. The potential for some sort of an upside around further deals for manufacturing of generics for those drugs, that's not really in the price. So I think given the outlook, the firm outlook for earnings expansion from this level, the stock is really quite cheap. And then you have that little potential kicker in the form of the weight loss drug expansion somewhere down the line. So that's stock we like, and we think that the sell-off provides a nice entry point into Aspen at a very attractive valuation.
Well, thank you so much for letting us in to your shopping basket there, Cobus. Much appreciated. That was Cobus Potgieter from Southern Cross Capital.